Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. It's Thursday, October 6th, 2016. I'm Andrew Hall. Joining me, as always in the morning, Mr. Ben Nye. Ben, how are you?
I'm doing well, thank you.
Very good, very good. So we're going to jump in, we're going to do a market overview, get to a couple topics throughout the day, and have some fun with it. So real quick run through futures. Dow futures and S&P futures, both down 9 basis points, so almost 0.1%. NASDAQ futures down 6, gold up 6 basis points, oil down 6 basis points. Nice little run by oil. You had again running up to that $50 barrier.
Yeah, I had the OPEC news, a week ago or so?
About a week.
And then you got this big hurricane coming through, I guess it's going to come on the Atlantic side.
Mm-hmm.
So it'll be interesting to see how oil shipments do in relation to that. It's a good run from oil.
It's had a good run. We had, last time we broke through that $50 mark, we had Matt Burton, Narwhal's founder, come out and throw some cash around on video, so maybe we'll do that again if we get there. Hopefully today. We'll just do a video of just that. There won't be anything else. It's just going to be that getting thrown around. But let's talk about a couple headlines, a couple stories. First thing that really stands out this morning, the most traded stock in pre-market activity this morning, Twitter. Quite a frenzy for Twitter. If you think back about what's going on, we've talked about it before on these videos. Go back, you can check out our YouTube archive. Just search Tusk Media, we're right there. But Twitter, it's a buyout story at this point. It's been a buyout story for a little while. We were shareholders of Twitter. We got out, I think around 1950, something like that, close to the $20 mark. It ran up right after we got out.
Yeah.
Not feeling great about that. It got up to about $25 yesterday on all these buyout rumors. And we talked about this before, but you had a couple candidates that kind of came out of the woodwork. Google seemed like a big acquisition for them. But at the same time, one that would have kind of fit the platform if they wanted to add something social media. You had Apple was in consideration, Disney was in consideration, mainly for ESPN, I would think.
Yeah, and it's like, where were these stories coming from? It's like, I'm not sure, I did not hear anything from really the companies. It was kind of this third-party reporting saying, it would fit in well with Google, but Google isn't really saying anything at the moment.
Recode did all of this.
Yeah.
and you kind of wonder, not to be too skeptical of the media, but Recode, they came out with the reports that they were going to listen to all offers.
Right.
Then there was the report that there were no offers. Then there was the reporting that Google, Apple, Disney, Salesforce
still
in the running.
Yeah.
And yesterday you kind of saw Twitter continue to inch up quickly. Sprint up is probably the better word. Get up to about $25. Meanwhile, Salesforce stock down like 5 or 6% yesterday. Yeah. So not a great day there, but now it's out in pre-market trading that Google's not interested, Apple, Disney not interested. And the stock's plummeting. It's down about 20%. It's down to that $20 mark or so.
What's interesting to me is that, so they had this about, 2-3 weeks ago.
Mm-hmm.
They have a huge meeting, okay? Everybody, we're going to figure out this Friday or this Saturday, is there going to be a deal?
Right.
And the whole board got together and they came out and they said, no offers, or we're gonna go it alone. And then like the next week, all of a sudden it's, Google's interested and Salesforce is interested, and now Disney is looking at it.
Yeah.
So it's very strange company, very strange situation.
It's strange, and I think what's interesting, we did some modeling kind of when we were trying to decide if there would be offers, kind of when we heard, hey, they're going to listen to all offers. And just working off, kind of comparable acquisitions, looking at things like sales, which I think in a lot of ways is the best gauge for Twitter at this point in the company's development. We modeled it out, and it seemed like the low end of that would be probably about $26 if they were going to get taken out. I think the stock was around $18 at that point. Right. So it's kind of based on some metrics tied to that and anchored to that. But when that's kept creeping up, by the time it gets to $25, before there is no deal, you start reworking those numbers, and all of a sudden the low end, just continues to go up, and all of a sudden you're saying this is a stock that was $18 2 weeks ago, and now we're talking about a low end of a buyout at like 35 or 40, and that just doesn't seem likely to happen. And obviously that's what's happening, people reacting to that. with Twitter, I think one of the things that's almost frustrating is it almost seems like when you think about Twitter, the program, really, really fancy artwork come up here. When I think of the platform, I love Twitter. It's like I view it just graphically like that. But then I start thinking about the business model of it, and it's not awful. I think they're making progress in what they're trying to do with monetization. I think some of the content rights that they've negotiated, the NFL we've talked about on here, I think that's good acquisition. I think they're doing good stuff, but still not really taking enough advantage of the platform itself. So you kind of have this other downstep, and it just seems like you take this huge downstep in the whole realm of management and communication. And you see this quarter after quarter where they beat earnings expectations, and then they find some way to message something, and they're transparent and they're clear, but they find some way to kind of beat themselves up despite beating expectations almost every quarter.
You know what we call this? We don't call this diversification. We call this diversification.
I was going to call it the staircase to hell.
That's another one. So like we have two new words here now.
Vocabulary lesson right here on Twitter. But yeah, I mean it's stock. It's about $20 right now. I would have a really hard time being too interested, especially with earnings coming up October 25th, because again, time and time again, it's not so much earnings that we're worried about. It's that conference call or that conference periscope that they did. It gets iffy there. The second they start to talk, you tend to see the numbers come out. You see a little spike after market, and then you hear Jack or whoever else, Noto or whoever, start talking, and you just see this thing come back. But I mean, they're sticking to Jack. All the credit to them if that's the way to go. They made it very clear that they're going to give him a couple more quarters. It sounds like, but again, it just seems like it's crazy to think all of these acquisition rumors were drummed out of thin air.
Yeah.
So it kind of makes you think, well, what went wrong here? And what went wrong may have just been the market overreacting, and then people saying, well, we're not going to get approval for a $1 premium on this stock at $26 versus $25. Or it may have been, just the stock running up too much and creating too high of an asking price. But
yeah.
That's about it for Twitter. Anything else to add there?
No, that's about it. We'll just wait and see what happens, I guess.
So we've got Twitter stock imploding, and we've got Samsung exploding.
Yeah. So on a Southwest Airlines flight, guy with a new Samsung phone, not one of the ones that was recalled, exploded in his pocket, smoke everywhere. They evacuated the plane, and now where does Samsung
Was
go?
it in airplane mode though? That's the question.
That's the key. So I don't know what happens with Samsung now. It seems like you deal with one fiasco, and then you move on. But it's like you got to get away with finish the problems,
Mm-hmm.
and it seems like they're not doing that. We're going to talk a little bit about that with Wells Fargo a little later on, but. The whole thing on crisis management is that you have to be out in front of the crisis. Yeah. You have to be out in front of the story, and Samsung is not out in front of the story right now. They're way behind.
Very reactionary. Yeah, they missed the flight on getting in front. What's interesting about Samsung too is you start thinking about Samsung, and especially their Galaxy phone line. It wasn't that long where people thought, hey, this is the Titan that's going to not only challenge but topple the iPhone, and that wasn't that long ago. And you look at the chain reaction of things that have happened since then in terms of the whole microprocessor space, and that whole industry was disrupted by Samsung putting more and more into that just to be able to get some cash going when the phone didn't take off. Now they got phones exploding, and it's just wild to think how quickly that's fallen. And in some ways I wonder if that lends itself almost to the success of the iPhone, where you're really not getting much of a competitor. And we'll probably get more and more data on iPhone sales. I think we're both on the same page in that we expect them to be kind of meh, kind of mid-range. But some people expected really poor performance, and you almost wonder if some of that's just kind of this prolonged effect of there just not being really much of a viable option.
It's really incredible to me when you think about it. How the Nokia, remember Nokia back in the day, and then BlackBerry, that was huge, and then Samsung, and through it all, the iPhone has been steady.
Yeah.
And the iPhone's continued to take market share very impressively. Something that we probably don't give them enough credit for.
That's one of the things I think back. The first smartphone I got was a BlackBerry. I don't know if you share that story, but mine was a BlackBerry, and the biggest reason was just the email component was so much better than the iPhone. It was almost like iPhone. I remember being at the store, the AT&T store, and the guy being like, well, if you do a lot of email, you don't want a BlackBerry. If you don't, iPhone's got more apps and all that kind of stuff. And that was like right when there's an app for that, that phrase started coming out. But it's just like, no, the BlackBerry makes more sense. But to think that it's kind of survived that whole transition, continued to gain market share, it really is.
So a lot of bulls, when they talk about Apple, they say they point to that and they say, Apple has stood the test of time, so it shouldn't be valued like a company that will just see sales plummet. Instead, like there is this longer life of their products that has a more durable effect. It's less a fad and more of a staple.
Yeah, it's a fad with a cult following too, which just still blows my mind that people will camp out to get a new phone. Yeah. But all the power to them. Walmart, big investor day, not as bad as last year where we were talking about this a little bit, where we really kind of saw the stock plummet. Yeah. But what are we seeing? What do we learn? Anything of note?
Well, for the last few years on the investor day, you have not wanted to own Walmart stock. It's been down about 10-15%. Historically, over the last 3 or 4 years, it has been the most volatile day of the year for Walmart.
Which is what investor days are for, right? really shake some confidence.
So last year the big issue was rising wages, and this year it seems like they finally have a grip on their guidance and they finally have a grip on their cost structure, which is something we haven't seen under the new management team since they took over. So good to see Walmart. I think they're down a little bit in market trading.
A little less than 1%.
But it's not like it was down 10-15% like last year. So
just
to them.
Yeah, just a bump in the road for Walmart. Reiterated guidance. We were joking about this earlier, but you always like to see when the headline is so-and-so reiterates guidance and the stock reacts. It's kind of like saying, hey, what we thought was going to happen, we now are confident is going to happen, and people panic. So not a lot of reaction there, just down a little bit. I think about 0.6%, something like that. I think that's all we got for the market overview. We're going to turn it over. We're going to hit on a couple individual topics, and we'll go from there.
Hi everybody, this is Ben again, back to talk a little bit about Wells Fargo and some of the issues that they've had over the last few weeks in terms of these falsified accounts that they've created and what the impact is on the stock, and if we've seen stuff like this before and how we can expect it to, what we can expect in the future from Wells Fargo. Kind of taking a step back on Wells Fargo. Wells Fargo has historically been, over the last number of years, the premier operator in the space. People are very confident with the management team. They say, well, management actually gets it at Wells Fargo versus at Bank of America, at Citigroup, even at JP Morgan. JP Morgan's had some issues as well. So they say, Wells Fargo is just, they're killer operators. And it turns out that one of the reasons their operations are so great is because they're creating other accounts that don't actually exist. So let's kind of explore some of the ramifications of that. When you think about a financial institution, or in really any business, you like to look at the buckets of risk that they're dealing with. When you're dealing with a financial institution, a bank, an insurance company, one of the biggest buckets of risk is financial risk, managing liquidity, managing market risk, managing fluctuations in credit quality and the assets and the deposits. So they are laser focused on that, and then once they can streamline that financial risk, they have to make that as efficient as possible. So how do they do that? Well, they fly a little closer to the sun, and at each iteration, when JP Morgan performs a little better, then Wells Fargo has to assume a little more risk. And at each iteration, they have all these models, these value at risk models, etc., that say, we're actually confident that the risk that we're assuming, we have managed, we have immunized, that if we have a fall in one asset over here, we'll have a rise in one asset over here. So they hedge one another out. So they're very focused on financial risk. It also results in them taking a little more risk on the operational side, because when you think of a bank, you don't think of operations being a big part of what they do. They're managing money more than managing people and managing the actual operations of the firm. Problem is, when you're not as focused on operational risk, you can run into some of these issues where you have salespeople creating accounts to meet quotas that meet unrealistic quotas just in order to keep their jobs. And the reason that, and the way they can do that is by creating false accounts. So they run into this operational risk problem. To date, they've had to pay $185 million in civil fines. We still don't know what the ramifications are going to be, if there's going to be a criminal probe, or the CEO, John Stumpf, was testifying on Capitol Hill. He's going to have $41 million clawed back. But $185 million in the context of Wells Fargo, give you some context, is $225 billion market cap company, $1.8 trillion in assets, and $194 billion in equity. So they can absorb $185 million in a one-time payment. What it does do, though, is it reduces that management premium that Wells Fargo has received in the market. Again, historically, when people have said, I just want a bank that's run soundly, whose operations are sound, whose management is competent, who I'm confident in, they'll say, Wells Fargo hasn't run into problems before, therefore we don't expect them to run into problems in the future. That's a little bit of a mental bias and doesn't adequately assess risk. That's like saying, I haven't died yet, so I'm not going to die in the future. But that is what people say. So they have received a premium in the stock market in the past, and that premium has largely evaporated so far. So if we look at a Wells Fargo chart, for those of you on the podcast, you won't be able to see this. Barrett's handling this in the post-production. But you can see how Wells Fargo has fallen from $50 per share to $45 a share about, which is a loss of 10%. You say, well, maybe has the larger financial sector fallen in concert with Wells Fargo, or is this just a market risk and the financials have sold off? That's not true. You can see Wells Fargo's underperformed JP Morgan by about 10% and has underperformed the larger stock market in general, the larger banking sector of the S&P 500. So what we can do is we can go back and say, well, Wells Fargo is having this hopefully one-time issue. What has happened to one-time issues that have seemed like the end of the world in the past? So the most clearest example is JP Morgan back in 2012. Back in 2012, there was a huge trader in London who took on exorbitant risks, had exorbitant losses in the billions of dollars, and JP Morgan stock fell by about 15 to 20%, and that also underperformed the market by about 15 to 20%. Again, for context, Wells Fargo is down about 10 to 15% right now. In addition, you can see the price to book ratio of both JP Morgan and Wells Fargo falling by relatively similar amounts as the stock, which would make sense. Wells Fargo is actually, its price to book ratio has been falling for the last number of months, which might suggest that, at this ratio of 1.2, this might be a bit of a baseline. So the bulk of the sell-off may already be over. If you look back at the JP Morgan chart, you can see most of the sell-off happened in just that month after the revelations came to light. And then after that, it was, a slow creep up. It didn't close the gap with the larger banks, but if you had bought JP Morgan at $37 in 2012, it's about $67 today. So, that's still good money as JP Morgan kind of resumed that uptrend that it had prior to the revelations of that trader. So the question now is, well, is the worst over for Wells Fargo, or is there more to come? It's really difficult to say. In fact, management doesn't know, and so I mean, how can we presume to know? In JP Morgan's case, it was a one-time deal. They continued to deny it, continued to get bigger, the loss continued to get bigger, but it wasn't crippling, and the stock actually started to go higher. So a lot of moving pieces from Wells Fargo. It is certainly not the best house of the day in the financial sector, but you're getting it at 10 to 15% lower than it was when everyone thought that management was so wonderful. So that could present an opportunity for some investors. Thank you.
All right, everybody. Andrew Hall back here. Matthew Krebs, what's up?
Not much. How's it going?
Doing good. Welcome to Krebs Corner.
Yeah, trying to kick this cold, you know.
Trying to kick the
It's
cold.
almost done.
He's just hungover from this weekend.
Still,
Today we're going to talk about what?
Bitcoin.
Bitcoin, baby. Talking about Bitcoin, which I think looks like this.
Doing good so far. That's good. Nice job.
All right, thanks for being here, everybody. This has been What is a Bitcoin? No. So educate people out there about Bitcoin, myself included, because I know very little. I feel like we hear about Bitcoins, but we don't really know what they are. So let's just start at the basic. What is a Bitcoin?
I guess first off, it's not a physical thing like this. Like,
Correct.
This doesn't really exist.
Okay,
Like
okay,
that.
good to know.
Strictly made up.
So nobody's carrying around Bitcoins in their
No.
pocket?
As far as I know, no. It's I think the simplest way to explain it is just digital currency, and
Okay.
that's it. Like, it's not a physical being. It's just online.
So it's a
That's
bunch
all.
of like code hidden somewhere on the interwebs.
Yeah, I
Is
guess.
that- that's the
I'm not a-
technical jargon.
I'm not a coder or anything, so.
Okay, so not a physical currency. You don't actually get it to take it with you. It's basically tied to the internets.
And as like time has progressed, a lot more like retailers and not retailers, but like merchants and everything have been accepting Bitcoin. I think at the beginning, not many did. I think it was like, I think it's pretty big in Europe.
Okay.
Like, they use it more in Europe. I think it's slowly spreading, and now, just like some of the websites that I've bought stuff at before, like recently, I've seen they accept Bitcoin now.
Gotcha.
Just like as an example.
So why would you want to own Bitcoin as opposed to just paying with PayPal or Visa or something like that online? What's the draw to Bitcoin, would you say? Or what are the draws? There may be more than one.
I think one is just simple, and I think you have like kind of, I don't know, what's the word I'm looking for?
I don't know. I'm asking you.
Yeah.
I'm asking you the questions.
Well, you have like, it's like a standard across like everything. Like,
Okay.
it's not, like you don't have,
Stable currency.
you don't have euros, you don't have dollars, you
Gotcha.
don't have whatever, like you just, it's all Bitcoin and everyone uses it.
Bitcoin here is worth a Bitcoin there.
Right.
Okay.
And kind of like the background of Bitcoin is there's a limited supply of it. So you have all these like all these central banks like devaluing the currency, and you know all the markets like getting hectic and whatever. But Bitcoin should, in theory, like stay the same.
Gotcha.
Since you can't devalue, you can't
Right.
make more Bitcoin. I think the max is 21 million Bitcoin. I think you have to mine it. This is another getting into it. Like you get Bitcoin by mining it like through a computer and stuff. I think we looked into that, and it's not cost effective to just buy a computer and mine Bitcoin.
So what does mining mean?
I think you just like get a program and like it just like
So there's just
turns
Bitcoin
it
like almost like hidden
yeah,
out there in the
yeah,
world.
you like create it. It's like
Okay.
created like you like verify the chain and whatever they
Gotcha.
call it.
But there's only 21 million-ish.
Yeah, that's the maximum. I think right now it's not there yet, but
Gotcha.
I think there's like a decreasing. It's like an algorithm that decreases over time. So
Okay.
I think it's going to be a long while before they reach 21 million.
Gotcha.
Well, we might be at like 19 right now. So
Yeah.
you know.
So you get Bitcoin. To simplify things, my Bitcoin probably has like a number tied to it so that it's uniquely mine, or a code, something behind it.
Sure.
Sort of.
Yeah.
Is that sort of close?
Yeah, I think so.
But then I buy something and they say, oh, it costs this amount of Bitcoin.
Mm-hmm.
It's like, oh, it might cost like 0.2 Bitcoins or
Mhm.
80 Bitcoin.
And they're
whatever it may be.
they're infinitely divisible. I
Mhm.
think. So,
Mhm.
like,
So you can pay with like tiny fraction.
Right.
Gotcha. So we got that. If I want to go out right now and just buy a Bitcoin,
Mhm.
how do I do that?
There's a lot of exchanges, they say, where you have to pay a fee on it, and the fees are kind of steep. I mean, we looked into finding like the cheapest way to acquire
Mhm.
Bitcoin, and there's not really a standardized way to buy it that we're comfortable with yet. I think there will be, like, within a few years.
Right. Probably as it increases in popularity, those fees come down.
I think it's like once the SEC like approves it and like all that good stuff, but that's a ways out. That we'd be comfortable with, like, doing
Right.
so. So we've been buying directly, and you can do that through an exchange with, I think the fees that we're paying right now, like 1%, 1.5%.
Gotcha.
I think you can get them like directly from, like, I could buy them from you. Not sure how that works, but we didn't want to go through that hassle.
I charge 2%.
Yeah.
That's how that works.
It's a good deal for you.
So you get the
Arbitrage.
Yeah, you get the Bitcoin, you store it somewhere, you use it when you want to use it. Do you think right now, just personally, we're not making any recommendations, we haven't bought any Bitcoins for clients or anything like that. Do you think it would be worth buying Bitcoin right now?
I'll
And
get
if
to that,
like-
but one more thing I want to add
Yeah,
on like Bitcoin is there's like a huge, or to me, there's like a huge idiosyncratic risk where it could get hacked. Like you've seen these hacks before. The price of Bitcoin drops 40% in the day.
Instantly.
And that was like our main concern buying directly is like how to store it. And I think we got, I think they call it like a cold storage safe that you can't really get them off there without coming to our office and taking our card or whatever.
Gotcha.
So, or that in theory, I think that's
Right.
the way it should work.
So don't share our address.
Yeah. My personal opinion on Bitcoin is, I don't know, I'm kind of like neutral on it. Like I understand, like the idea behind it. Like when everything gets crazy, markets go, everything.
It should be stable.
Central banks just keep devaluing currency and everything. It should like perform the best. And I think it'd be a great hedge. But then I think about, well, what if you get hacked and then you lose half your value of what you put into it in a day or something like that?
Yeah.
I don't know. I'm really neutral.
So there's almost more like event risk,
Yeah.
like isolated risk, but less like systemic risk to like to the economy and financial sectors as a whole.
It's kind of my stance.
Okay.
What's your
I
broad idea?
My broad idea is it'd be really convenient, like when I'm like gambling and stuff online, because they all have Bitcoin. That's my broad take on it. Is that I think it'd be a lot easier when I'm like at an online sports book or casino.
That's what really matters.
It'd be much easier than paying the fees and them calling to verify the transaction at an international bank. So I think that'd be a lot easier. So I'm pretty pro Bitcoin just for those reasons, because also when gambling you could lose half your money just like that anyway.
That's a good point.
So when I compound that risk, it's like, man, do I even have money? So
What is money?
Yeah. So from that regard, I'd rather lose Bitcoin than money because it's just not even real.
It's a good way to look at it.
No, in all seriousness, I'm kind of with you. I think I'm kind of neutral. I get the idea to it. I don't quite buy into the utility of it yet in terms of the ease and the currency issue, just because I don't feel like I make enough purchases in which currency really has a huge impact. But
you could say by the time you get into it, you'd be too late and you'd be buying Bitcoin for
huge premium.
whatever, let's say 500, I think it's 600 now, then it's going to be $6,000 by the time you want to get in.
Yeah, so then it's kind of like, it's going to get, and I do think it's one of those things where you're going to have a legitimate lack of supply pretty quickly. I mean, especially if the conclusion of the mining process coincides at all with like an increase in global unrest. I mean, you could see that thing just spike, because all of a sudden there's no Bitcoins out there. They're all mined, and hey, they're really, really attractive right now, and people are more and more comfortable with it. So I also think people become a little bit more comfortable with risk when they see kind of comparable risk in other assets. So I think if those two things happen close to the same time, it'd go through the roof. So yeah, let's buy some. Yeah. There we go. Anything else on Bitcoin?
No, I think that's it.
There you go. Bitcoin 101 illustration. Talking points. You guys are good to go. Go get some Bitcoins. Y'all have a great day.
Hey everybody, this is the part of the show where I give you a quote of the day and you think about it because it's profound. Today our quote of the day is by a man named Arthur C. Clarke. He is the writer of, I think, 2001: A Space Odyssey, a bunch of other stuff. That's the only one I know. But this quote is all about the Samsung Galaxy S exploding, or the Galaxy 7.
Whatever it was.
Whatever it was, it exploded and there was fire. So I was trying to think, what's a great quote about technology that kind of applies here. And I was drawn to this quote by Arthur C. Clarke that I'm sure many of you have heard before. But he says, any sufficiently advanced technology is indistinguishable from magic. And when I think of magic, I think of fireballs, like everybody. It's cool, wizards do it, they cast fireballs, it's wild. And I think that's what's so cool about these new Samsungs, is they're indistinguishable from magic. You get them, this technology is so powerful, it just explodes. Thank you, this has been the quote of the day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.